Cool. Okay, so we've crossed the hour mark here, which means that we are onto our kind of final section. Whenever we have guests, it's been a while since we had any guests on, but we invariably end with a reasonably stupid game of asking people in a quick fire way what they think about certain stocks. And we know none of this is financial advice, but I'll repeat that for the benefit of anybody listening. But I'll ask you about some stocks and and you can give me a quick fire response as to whether you think they are positive or not. We invariably give these ridiculous names, such as when we had Chris Hill, we had uphill or downhill. When we had Sven Carl in, we had Sven Carl in or Sven Carl out. I thought carefully, I put more thought into this than anything else on this show about what we're going to call this. But I will go call this game for the moment the doctor is in or the doctor is out, depending on how positively you feel about this, the particular stocks we've got coming up. So I'll fire off a list of names, none of which I've told you about beforehand, by the way, just for the benefit of anyone listening on this occasion. Yeah. You might have views on them, you might not have views on them, you might not have heard of them, in which case it's fine, we'll just pass and move on to the next thing. But you tell me whether the doctor is in or the doctor is out on Greg's.
Doctor is out.
Okay, right. Enough of this game already for the time being. Yeah, your views on Greg's are legendary. We will come back. We'll do this properly in a second. But
okay,
tell me about Greg's and your general dismay about Greg's.
It's a purveyor of sausage rolls. It's not making tech. It's not making software. It's a company that should never have been trading around, I think, 25, 26 times forward earnings. When was that? Last year. That was quite crazy. Its margins are still quite thin. It's still, you can't argue. It's not a luxury stock. It's not like a Louis Vuitton where the people are aspiring to shop at Greg's or to get their bakeries from Greg's. It performed well for a period of time because there was a cost of living crisis and it provides cheap, filling food. I don't dislike Greg's. I actually used to like Greg's, but I would also add in the fact that
some of your best friends are at Greg's. Yeah, sure.
Yeah, exactly. That's very true. But I'd actually add it. I'd add in as well. I think the market occasionally underestimates that people want to make healthier choices when they can, and Sumakwa. But yeah, Greg's doesn't really offer that at this moment in time. There's nothing wrong with a steak bake every now and again, but I feel it's coming towards a saturation point in terms of how many of them they can put on our high streets. I think there's already 3,000 of them. There's 2,600 and aiming for 3,000 in the next few years. That's a lot of Greg's, and I in the ideal world, I don't know. There's people like Chris Van Telekan out there who are saying, I might be misquoting him here, but I think he has suggested on several occasions that, or other people in his position have suggested that there should be some taxation. We should be taxing fatty foods, ultra processed foods, like we tax cigarettes and booze.
Yeah, so I'm looking at the share price chart now over the last 5 years, and considering it's not a tech company, and it is actually a reasonably resilient, yes, I get the COVID closures stuff and so on, and that justifiably makes sense for this. But even after that, it has been a very up and down stock. It's actually quite hard to know how much I would have if I'd invested £10,000 in the stock 2 weeks ago. But anyone can go and look that up if they would like to. I agree with the things you say, by the way. I'm concerned about saturation point too, and like-for-like growth has been pretty poor from this company.
It's 2.5% or something in the last, I think you told me that.
Which is about inflation level, to my mind, and I think I need to see something better than that. There is a price at which I'd get interested in this. It's probably slightly below where I am, but people know my views on Greg's. Enough of this. Right, time for actual the doctor is in or the doctor is out. Since you are a full UK writer, let's begin with Lloyds Banking Group.
The doctor's in.
Mm-hmm.
It's kind of on the fence. It's kind of on the fence a little bit at the moment. So I think it's trading around 10.5 times forward earnings. There's a bit of a blip in earnings, I think, because of the potential fine and some other things going on this year. It's definitely a lot closer to fair value than it used to be. Really interesting stock. The unwinding of the structural hedge, I think, is really important. That's where it's getting rid of bonds. That is obviously, in a simple way, it's getting rid of bonds and fixed returns around 1%, and it's replacing them with things, bonds, gilts, whatever, at the higher end of the yield, where we are at the moment. broadly, also still sticking on interest rates. Interest rates are moving towards, at least in the long run, they're probably going to stick somewhere in the Goldilocks zone. The economy is going to carry on growing by 1.5, 2% a year. Interest rates are going to stick somewhere between 2 and 3.5%, probably in the long term, towards the end of the decade. That's great for banks. So it's hard because I'm a bit biased because I've already got quite a lot of Lloyds because it's already, it's done quite well over the last few years. I'm not going to buy any more for my portfolio, but I'm holding it and hoping it still appreciates somewhat.
Terrific. Nvidia.
Yeah, so I'm just trying to think of where it is at the moment because there's so much of, is it about 135, 136? Yeah, the doctor is in, I think. I think it's okay, so its metrics aren't too demanding.
Doctor still in at 140?
Yeah, I think so. I think the PEG ratio must be like 1.05, something like that. Yeah, I think I'm still in. But mainly because of its, I appreciate hardware's going to trade. It's going to trade at a discount to some of its kind of other tech peers. But I think broadly speaking, it's still undervalued. Obviously, big risks in terms of peers catch up, Chinese peers catch up. Doesn't seem to be that realistic at this moment in time, but things can change over the long run. I also think it's got a great future in robotics. And it's got the software ecosystem to make that work. So I think that's quite an interesting stock. So yeah, the doctor's in.
Judges Scientific.
If I don't know enough about the company, I don't know. I'm not sure. Yeah, I'm not sure.
Not a problem.
Sure.
Diageo.
Yeah. I haven't seen where it is at the moment. I'd say
about 21, maybe.
21. Yeah. The doctor's in. I like what it's doing around. And this is a very kind of niche kind of opinion on it. It's been buying up more kind of luxury or higher end independent brands, and I think in the long run, that's going to put it in decent stead. The broad premise behind economic development is we all get marginally richer. We all gravitate towards things that are slightly more, luxurious, so to speak. These things happen over very long periods of time. But if you look at things that happened 40 years ago, drinking culture, for example, 40 years ago versus now, we are, in Britain at least, we all, drink wine, not beer. We've gravitated towards broadly more expensive, more luxurious, slightly more market brands. I don't count me on this, but something I imagine if you look at kind of, there's probably a nice chart which shows you the drinking of Carling over the last 40 years has probably fallen, I imagine, in relation to wine drinking and stuff like this. So wine consumption. I'm making wild guesses here, but I do know something about its movement towards acquiring slightly more higher end brands, niche brands, and things that I think might do well in the future.
Cool. I couldn't work out which of these to choose. You'll see why in a moment. But as an former oil and gas guy, either BP or Shell. If it depends which one, then say that.
Yeah. Well, I kind of throw kind of much. Okay, Shell's a bit more expensive than BP. BP carries a lot more debt, doesn't it? But investments in oil and gas, for me at least, are always kind of going to be based on the long-term movements in oil and gas. So the actual oil and gas price. Broadly, I'm relatively upbeat on, upbeat. I think oil and gas prices will probably go up primarily because there's a finite amount of oil, and we're moving towards a position whereby companies are increasingly competing for oil and gas reserves in frontier markets where it's harder and more expensive to extract. So the doctor is in.
Okay. Tesla.
So hard. Doctor is out, probably. I don't think it should be trading where it is. But of course, is it next week? Is it this week? It's only a few days away. It rolls out its robot taxi. And if it looks really good, then yeah, the share price could shoot. But I still think, I still don't, I still don't think it should be trading where it is at this moment in time, based on the fact that it's sales are falling all over the world, and that's not where you want to be. Brand reputations in tatters. So yeah.
If anyone's watching this on YouTube, by the way, in the shorter version, in a previous episode, which I don't know, I'll try and link or something, James identified AI and robotics as his long-term trend, but the man has principles, and as such, the doctor is in on oil and gas and out on Tesla. Good to see. Salesforce.
Salesforce. Honestly, I haven't covered it for a while, so I don't think I know enough about it to give an opinion, to be honest.
Fair enough. In that case, let's finish with one that it is the law that you have to know about. RollsRoyce.
Okay. RollsRoyce. Doctor is in the long run. Yeah. I think there's lots of positive catalysts. Demand for air travel in the very long run as countries, once again, we're talking about economic development and people want to fly, people want to travel, business takes place. India being like a massive example of that. You've got so many people expected to join the middle class over the next 10, 15 years. And that will send demand for air travel sky high. Rolls-Royce being one of the two major providers of aircraft engines, or two or three major providers of aircraft engines for narrow-body planes, might be moving back into wide-body. Also, I think there's potential catalysts when we look beyond defence as well. But the small-scale nuclear reactors, that could be a big. It seems to be ahead of the competition. It could have first mover advantage. Also, going back to kind of comparing it with GE, for example, aircraft engine maker, it's trading at a discount, I think, or at least last time I checked, around 5-10% still. So Doctor's in, huge economic moat as well. Sorry to get more points on it, but you can't just kind of dive into being a defence company so easily. I know Lucky Palm or Palmer Lucky has done, or whatever. You can't just make aircraft engines overnight, and you can't just make propulsion systems overnight. You can't make small-scale nuclear reactors overnight. These are really hard industries to get into. So it's a quality company. I'm in.
Super stuff. Okay, that brings me to the end of my list and pretty much to the end of our show. James, thank you so much for sitting down with us. It's been super fun.
It's been my pleasure. Thank you.
Terrific way to spend a Wednesday afternoon for me. If you're listening and you enjoy the show, do check out James. He's on YouTube and Instagram at TradePass, TRADE_PASS. But for the meantime, you can also check out his work over at Guru Focus or Full UK, writing on, pretty much everything, but especially if you want to know about your Greg's returns. Anyway, I've been Steve W. This has been the Playing FTSE Show. We will be back at around the same time next week, probably with our more normal kind of run through of earnings and stuff. But for now, it's bye for now.
Brilliant.